away the livelihood of lakhs of people, but at the same time, hundreds of hands were up for help. A large number of people donated. Donations for such causes are eligible for exemption. Recently, a strange case came to the fore where a person claimed tax exemption under Section 80G of the Income Tax Act on liquor served in a seminar. However, the Delhi bench of the Income Tax Appellate Tribunal held that serving liquor is not a charitable activity and hence exemption cannot be given. So what is Section 80G? Let us get to know. What does Section 80G say? Section 80G of the Income Tax Act provides the benefit of tax deduction on donations made to relief funds and charitable institutions. All taxpayers, including companies, HUFs, can claim the deduction. However, this tax benefit is not available in the new tax regime. So what is the mode of payment of donation? Donations can be made by any means like check, draft or cash. If you donate things like food, clothing or medicines to charity, then deduction under Section 80G cannot be claimed. Donations in cash above 2,000 rupees will not get the benefit of deduction. Tax and investment expert Balwant Jain explains that 100% tax deduction can be claimed for donations made to most charitable funds or institutions backed by the government. A 50% deduction can be claimed on donations made to general charitable institutions or NGOs. However, the amount of donation on which you are to receive deductions should not exceed 10% of your total taxable income. The trust or institution must be registered under Section 12A of the Income Tax Act. For example, assume your income is 10 lakh rupees and you have given a donation of 2 lakh rupees. Let's assume that 80C, 80D and other deductions come up to 2 lakh rupees, then your taxable income will be 8 lakh rupees. In this sense, you will get deduction of 10% of 8 lakh rupees, that is 80,000 rupees only. It doesn't matter that you have donated 2 lakh rupees. In case of a normal NGO, only up to 40,000 rupees can be claimed as deduction. Notified funds charitable institutions by the government. The Income Tax Department has notified certain funds for donations to charitable institutions which can be availed for deduction on donations. For example, you can claim 100% deduction on donations made to National Defence Fund, Prime Minister's National Relief Fund, PM Cares Fund, National Children's Fund, National Foundation for Communal Harmony, donations given to educational institution or university of national repute, whereas on Prime Minister Drought Relief Fund, Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation, you can claim a deduction of up to 50%. So what to keep in mind while giving donation? While donating, a copy of the 80G certificate of the trust or NGO should be kept with you. To claim the deduction, you should have the original receipt of the donation. Photocopying will not work. Do not make a donation of more than 2,000 rupees in cash. You should also check that the contribution amount does not exceed 10% of the income. If you want to donate more, then it can be done and given in 2 to 3 years.